I am Mrs. Sonia Sriram and it's my privilege to host today current affairs session. Such programs play an important role in broadening our perspective and reminding us of the foundational ideas that continue to influence modern research and innovation. The topic for today's session is mathematics behind stock markets and the digital economy. Mathematics plays a crucial role in understanding and analyzing stock markets and the modern digital economy. In the digital economy, mathematical algorithms power technologies such as high-frequency trading, blockchain, artificial intelligence, and financial forecasting by providing a logical and quantitative framework. Mathematics helps investors, analytics, and policymakers make informed decisions in complex, data-driven financial system. Mrs. Poonkodi Sathiyamoorthy is an associate scientist at REST Labs. She holds a Master of Science and a Bachelor of Science degree in Mathematics from Arinarana Arts and Science College in Krishnagiri, Tamil Nadu, India. She is a member of professional organization and actively participates in research and educational activities at REST Labs, contributing to multidisciplinary research and knowledge dissemination. I now request Mrs. Poonkodi Sathiyamoorthy to take the stage and enlighten us with her thoughts. Over to you, ma'am.
Good afternoon to everyone present here. Today we live in a world shaped by rapid economic changes, digital transformation and data-driven decision making. Stock markets, digital finance, artificial intelligence and economic policies are no longer distant topics. They directly influence our daily lives and future opportunities. Today's topic is both timely and important in the present scenario. It highlights the recent developments, challenges and opportunities that are shaping our society and future. This topic helps us understand how knowledge and innovation can bring positive change. I am sure this session will be informative and thought-provoking for everyone present. Today I would like to share my thoughts on mathematics behind stock markets and the digital economy. Plays an important role in our academic and professional lives. In recent years, stock markets and the digital economy have been at the center of global news. Headlines frequently discuss market volatility, interest rate changes, artificial intelligence driven trading, digital payments, cryptocurrencies and regulatory reforms. While these developments appear to be driven by technology, geopolitics and investor sentiment, their true foundation lays in mathematics. Current financial news across the world clearly demonstrates that mathematical models, statistical analysis and quantitative methods are shaping modern markets more than ever before. One of the most significant current developments is the increasing role of data-driven decision-making in stock markets. Global stock exchanges now process millions of trades per second, and each trade releases and precedes mathematical calculations. Prices are determined by algorithms that evaluate supply, demand, order flow and historical patterns using statistical and probabilistic models. Recent market movements shows that even small changes in interest rates or inflation data can trigger large price swings, highlighting how mathematical expectations and numerical forecasts directly influence investor behavior. In India, recent economic policy announcements and budgetary decisions have shown how fiscal mathematics affects stock market sentiment. Government projections of revenue expenditure, fiscal deficit and borrowing are numerical estimates based on mathematical models. When these numbers differ from market expectations, stock prices react immediately. This reflects how investors depend on quantitative analysis rather than intuition along the axis future economic conditions. A large percentage of trades in major stock markets are now executed by automated systems. These systems rely heavily on mathematics, particularly probability theory, linear algebra optimization, and time series analysis. Algorithms scan massive data set to identify patterns, price discrepancies, and arbitrage opportunities within milliseconds. Recent regulatory discussion worldwide focuses on controlling algorithm risk, showing how deeply mathematical systems are embedded in modern trading. The digital economy is also expanding rapidly through digital payments and fintech platforms. The increasing adoption of real-time payment systems, mobile banking, and digital wallets behind these systems are mathematical algorithms that calculate transaction values, interest, fees, exchange rates, and settlement balances instantly. Secure digital payments depend on cryptographic mathematics, including number theory and algebra, to protect user data and prevent fraud. Cryptocurrencies and blockchain technology continue to attract global attention. Crypto regulations, price volatility, and institutional adoption often dominates financial discussions. Blockchain systems are entirely built on discussion. Blockchain systems are entirely built on mathematical principles such as cryptographic hashing, modular arithmetic, and such as cryptographic hashing, modular arithmetic, and consensus algorithms. Recent developments in stable coins and central bank digital currencies (CBDCs) further emphasize how governments and financial institutions are applying mathematical models to design secure and stable digital money systems. The growing influence of artificial intelligence and big data analytics, AI-driven models are use advanced statistics, probability, and optimization techniques to forecast market trends, assess credit risk, and deter fraud. Financial institutions increasingly rely on predictive models to manage uncertainty in volatile markets. However, recent debates also highlight the risk of over-reliance on mathematical models, especially during unexpected global events. Events such as sudden market crashes, banking stress, or global economic slowdowns reveal the importance of mathematical risk measurement tools. Techniques like value at risk, stress testing, and scenario analysis use probability distributions and simultaneous to estimate potential losses. Regulators use these mathematical frameworks to monitor financial stability and prevent systemic crises. Markets are influenced by human emotions, political decisions, and unpredictable stocks that cannot be fully captured by equations. This has led to increased interest in behavioral finance, which combines psychology with mathematical analysis to better understand investor behavior. The mathematics is the hidden engine behind stock markets and the digital economy. From price discovery and algorithmic trading to digital payments, cryptography, and risk management, every major financial development is supported by mathematical theory and methods. As markets become more digital, data-driven, and automated, the role of mathematics will continue to expand. Understanding this mathematics foundation is essential for students, professionals, and policymakers to interpret financial news accurately and participate effectively in the future of global finance. Thank you to everyone.
Thank you, Mrs. Poonkodi Sathiyamoorthy, for the informative and insightful talk on mathematics behind stock materials and the digital economy. Your session clearly explained how mathematical from the backbone of modern financial system, from stock market analysis to digital transactions. The way you connected theory with real world applications made the topic engaging and easy to understand. We truly appreciate the time and effort you have taken to share your knowledge with us today. I am sure everyone here has gained a deeper understanding and inspiration from your speech. At this juncture, we are honored to invite our respected Mr. Sathiyamoorthy, core scientist, to offer her expert observations and research insights on today's seminar. Over to you, sir.
Respected Chief Guest Mrs. Madam and today's speaker Mrs. Poonkodi Sathiyamoorthy and my dear faculty members, good afternoon. It is a privilege to be here today. I sincerely thank the organization for inviting me. The topic mathematics behavior, stock market and digital economy. It's extraordinarily relevant in today's data-driven financial landscape. As we have learned from our speaker, mathematical underpin financial modeling, algorithmic trading, risk management, portfolio optimization, and digital payment system concept like probability, statistics, calculus, linear algebra, and cryptography for the backbone of modern financial system and the digital economics. Mathematics is just numbers. It is enable quantity analysis, predictive modeling, variation of assessed value measurement, and derivative pricing, where your career path is around finance, technology, and entrepreneurship. Mathematical thinking equal you to make education based data driven decision and negative complex system effective. This is a reminder that mathematics is a critical life skill. It fast analyzing, reasoning, computational thinking, optimization skill, and strategy decision making, all of which are essential in today's digital economics. I encourage everyone to actively engage, ask questions, and explore how those mathematical concepts are applied in real world finance and digital platform. Knowledge combined with practical application is the true success in a rapidly evolving global economics. Once again, I thank our chief guest, our speaker, and the organizing team for this valuable insight. I wish the program great success. Thank you.
Thank you, Mr. Sathiyamoorthy, for your valuable insights. Now I take this opportunity with great honor to welcome our esteemed Mrs. Vimala Saravanan, Accounts and Administration Aide, to grace this occasion by sharing her valuable thoughts and insights on today's event. Over to you, ma'am.
Thank you, Mrs. Sonia Sriram. Good afternoon, everyone. I would also like to appreciate the insightful presentation by Mrs. Poonkodi Sathiyamoorthy. The points shared have set the story foundation for your discussion today. Appreciate you, ma'am. Your guest, Mr. Sathiyamoorthy, has also highlighted several important points as the subject has already been covered the depth. I will focus on UP key points. Appreciate you, sir. Mathematical underfund stock marketing and the digital economic by enable asset value, risk management, portfolio optimization, algorithm trending, and secure digital translation through statistic probability calculator and cryptography, mathematical modeling support, marketing efficiency, digital finance innovation, and information discussion making in data driving global financial system. Thank you.
your valuable insights. With this, we come to the conclusion of today's current affairs session program. I sincerely thank everyone for your presence and cooperation. Thank you once again and have a pleasant afternoon.